Good morning. I am Bev Curtis here at Bev & Co. at House of Brokers, and welcome to Breakfast with Bev this morning. Hope you guys are having a fabulous week. We're very excited this morning. We've got another special guest with us this morning, Ian Chang with Providence Bank. So thank you so much for joining us, Ian.
Thank you for having me.
Would you mind kind of telling us a little bit about yourself this morning?
Well, I'm a 3-year resident of the Columbia area. I'm originally from California. My wife is originally from the mid-Missouri area, and we came out here. I did a career pivot into mortgage. I've been in the mortgage industry for about 3 years now. Had a opportunity with Providence Bank, and it's just been fantastic over there so far.
Well, that is fantastic. So we're thrilled that you're now to the Midwest and joining us here in Boone County and going to town with home loans and that. So with that being said, our topic this morning is one that probably buyers are not too fond of. And there's a little mystery behind it, and that is PMI, private mortgage insurance. And most buyers want to try to avoid that at all costs. And so that's why I thought the topic would be really good, because many people don't quite really understand what private mortgage insurance is, how it plays a role in the loan process, and what all that means to them as far as their financials on a monthly basis. So, Ian, would you mind telling us what exactly is mortgage insurance?
Well, private mortgage insurance, or MI or PMI, it's all the same thing, different acronyms. But MI is basically a insurance policy that you're taking out on the actual money that you borrow, on that loan amount. It's an insurance policy much like you would have like on your car or a boat or anything like that. Just insures it, essentially.
So why does one need mortgage insurance?
Well,
or who really needs the mortgage insurance?
Well, I mean, basically, mortgage insurance just creates a lot more opportunity and a lot more, things for a first-time home buyer to take advantage of, more products for them to take advantage of. If you don't have that 20% down, mortgage insurance basically is there to help you.
Okay. So, with that being said, how does the mortgage insurance really work? What's the fundamentals of all of it?
Well, I mean, basically, it just reduces risk. I mean, it's all about risk. The lower the risk, the less need for it. Mortgage insurance, there's several ways for it to be, to be put in place. The most popular one is a monthly payment, where it's wrapped up in your monthly, mortgage payment. You also have a single payment where you pay for it all up front. That can be either paid by the borrower, paid by the seller, or a combination of the two. And then you also have another option, which is lender paid, where essentially you agree to a slightly higher interest rate, and through that delta, the lender will take care of that single premium for you.
So it sounds like what I'm hearing you say is it's mostly for the protection of the lender, so that the borrower does not default, but it allows someone with 20% that doesn't have to put down to be able to get in the game, purchase real estate, and then basically once you get to that 20% threshold, then the PMI can be removed at some point,
Absolutely,
right?
Yeah.
It's not a forever thing.
Well, actually, yes and no.
Okay.
On a conventional mortgage, once you hit that 20%, you can request to have it dropped off. It automatically drops off at 78%.
Okay.
The difference is with the FHA. With the FHA program, that MI stays for the life of the loan.
So if you start into it, you're into it for the long haul.
Absolutely, yeah.
Okay.
As long as you have
Very
that
good
FHA loan on the house, the mortgage insurance stays with it.
So does every single mortgage out there have the MI requirement?
Not necessarily. I mean, obviously, with that 20% down payment, you can avoid it. There's also other programs such as the VA loan, the USDA Rural Development Loan doesn't have an MI requirement. There's also, if you're a doctor, there's a physician's loan, which most physician's loans don't carry that MI requirement as well.
And do you work with physicians loans then too in your program?
Absolutely. Yes.
Okay.
Yes.
So do you mind kind of sharing us real quick the products kind of that you work with then with Providence Bank?
I mean, it runs pretty much the full gamut. Obviously, we have, your Fannie, Freddie loans, the conventional loans, the FHA loans. We even have, we've got a great physician's loan product, as well as, HELOCs, equity loans. We also do lot loans, construction loans.
Oh, wow. So you do
and
the full gamut then.
It is a broad spectrum of lending that we do at Providence Bank.
Okay.
Yeah.
Is there anything else that you could think of that one should know as far as a consumer purchasing real estate about PMI?
Yeah.
That we haven't covered that you think is important?
Absolutely. There's a couple of things that will affect how much that MI will cost you. Your down payment amount. If you put down 5% or 10%, that MI will get reduced. Another thing that I think most borrowers don't understand or don't know about MI is your credit score. Your credit score affects how much mortgage insurance you're required to carry. So better credit scores, the lower amount that you'll be required to carry. Also, the loan type, whether it's a jumbo, whether it's an ARM, whether you're relocating, all of those will affect how much or how little you pay for MI. And then also, if you're doing a monthly payment or if you're doing that single payment. Oftentimes, if you're going to be in the house for a while and you want to reduce your overall costs, that single payment is definitely a good thing to look into.
So I guess it's a matter of determining how many years that you're going to be there to kind of do the math to see if it's going to be advantageous.
Absolutely. Yeah, I mean, I think, rule of thumb, not to get too deep into, into it, but, rule of thumb, 4 to 5 years, if you're going to be in the house more than that time, that single payment is definitely going to be a good thing to look into. It's going to save you some money in the long term.
Right. Well, and keep in mind, too, with disclosure laws and things, there's only so many things that we can cover topic-wise here in this format. So if you do have a unique situation as far as private mortgage insurance and maybe you already have it in your payment, maybe you're looking to purchase, those would be excellent questions to consult with a qualified loan officer to basically evaluate your situation and see what's going to be in your best interest.
Absolutely.
Yeah.
And a good loan officer is going to look around at the different MI companies and find that best deal for you and hopefully, present all of the options to see which is going to be, help you achieve your home ownership goals.
Yeah, exactly. Okay. Well, this forum is basically designed for topics just like this that we're just talking about here with Ian, is that we want to educate our clients and friends on real estate related topics that we think will be pertinent to their decision making and just their future financial status. So we really do appreciate very much, Ian, you being here this morning with us.
My pleasure.
And Ian is a great reference to consult on this. If you have other topics relating to loans or basically just real estate in general as far as the financing aspect, Ian at Providence Bank is a wonderful fit. So is there anything else you want to add in?
I'm going to put my contact info in the comment section. So if you have any questions, just want to sit down. Maybe you're not quite ready and you just, want to go over some scenarios. Get my information there in the comment section, and I'd love to talk to you a little bit more about your home ownership goals.
Sounds awesome.
Yeah.
Okay. Hope everybody is having a great week. We really do appreciate you joining in this morning. Have a great weekend as well, and we'll see you next week. Take care.
See you later.